Good morning, everyone. I'm Greg McKenna, and welcome to the 9 a.m. morning market wrap of all the overnight news and events from the US, Europe, and Asia. Last night was a great night for stocks. The Dow was up over 600 points, a rally of 3.95%. S&P was up around the same sort of numbers, and the Nasdaq was up over 4%. That's a really solid rally, and it's not unexpected given the volatility we've seen. Europe missed out on that rally though, and once again it shows what a difficult time zone Euro is when it comes to trading. Influenced by the continued pressure on Shanghai stocks yesterday, it's clear that European traders were reacting both to that and to the previous night's trade on the US, and it wasn't really until after lunchtime in the US when Europe was heading out that stocks in the US really started to rip higher. So it was a really solid night for stocks. That's meant that the ASX has rallied and rallied quite strongly. It's looking like it's going to go higher, and might be a good time to have a quick look at a chart here. Ooh, that's a bit ugly. Right, so this is the futures and physical combined. If I blow that up so you can see where we are. We've made this bottom. My trading system is essentially a combination of moving averages, Bollinger Bands, and MACD. I put them all together in a Greg McKenna witch's brew. But essentially, what I've got is I've got a market here that's made a clear bottom. It's found resistance at my fast-moving average, which always happens. It's had a bit of a retracement, and now it's rallied again. My sense is it's going to go back to 5,400. And so I'm quite positive on the ASX at the moment. Likewise on the S&P. After that, you can see this is the very definition of an overcooked, oversold market. If you have a look at this price action here, we're trying to find some stability. We've had the average true range go through the roof. We've had the MACD go through the floor, prices through the floor, and now we're trying to consolidate. We're halfway through what I think is going to be the minimum recovery in the S&P. So I'm expecting the S&P to come back and retest the line and my fast moving average. How it goes after that, we'll have to wait and see. But that's my expectation at the moment. So I am constructive on the ASX and other stock markets in our time zone today. Elsewhere, it was an interesting night for currency traders. Durable goods out in the States last night up 2%. For July. X transport up 0.6% against expectations of 0.4%. The US economy is not weak, not by any stretch of the imagination, and the US economy is completely incompatible with zero interest rates. It's interesting, the Fed's got itself into a bit of a bind. The market is expecting no move in September now, or pretty much no move in September. But the question I guess you've got to ask is, even though Bill Dudley from the New York Fed last night said that the case is less compelling, all that's going to change in a week or so when non-farm payrolls comes out if it's another solid print. So realistically, we are in a real state of flux. And I would think that, we'll get some guidance from Stanley Fisher at Jackson Hole over the weekend about, the inflation outlook and what the Fed's thinking about inflation. But overall, it's looking to me like the Fed's got itself in a real bind. They really need to tighten, if for no other reason than just to kick it off. But with all the volatility at the moment, maybe it's a little bit difficult. But the durable goods helped the US dollar get its mojo back and then some. You've got euro having gone up to 117, back at 113.30. Sterling's at 154.70, and dollar yen's back above 120. There's been some massive moves there. I know I said I thought dollar yen to go back to 116.50 yesterday, but clearly with the US dollar having strengthened so far, it seems that's not the case for the moment. But what I think we're looking for is we're looking for a bottom in euro so it can then start to range again. The ANZ's put out a piece this morning saying that the equilibrium rate for the lower euro might actually be higher. They've also downgraded their forecast for the Aussie to 68 cents by the end of the year. And if you have a look at the Aussie 71.22, it hasn't had the acute moves that you've seen in some of the the other majors, but largely that's a reflection of the fact that euro shorts were massively short. Aussie shorts are short, but there's been, in this current environment, there's been no compelling reason to take back any of those shorts, whereas in the euro, there was as money travelled home. So that's why you're getting the divergence, and that's why you're getting the big Euro Aussie moves that you've seen over the last little while. But overall, the pressure remains on the Aussie dollar. Speaking of which, CapEx today's out at 11:30. Private capital expenditure has been in a downtrend since 2012. It's been one of the key parts of, where's Australia's economic transition, and it's fair to say that the consumer's doing their part. So it's now up to business to invest. We saw the construction work done yesterday was much stronger than expected, so that's going to put a bit of a positive floor under CapEx. But we're going to have to see how the data prints today. Westpac said that they're looking for a fall of 2.5%. After the last 4.4%, but it's as much about how much CapEx was actually done as how much the forecasts are for CapEx going forward. So watch that number 11:30. That'll be a big one for the Aussie. And remember, often that's the one where the Aussie does a different thing 2 minutes after the number's released, because people look at the number of what was actually done in terms of CapEx, and then they look at the forecast and they try and balance out. So it's always a bit of a dangerous number to have a look at. Gold's lost its luster, which is a clear indication that people think that fear is receding. It struggled to get through the my slow moving average and has come back another $17 last night. Oil's under pressure. We've got a global growth slowdown or a recalibration of people's expectations of global growth, probably a different way to put it. And you've also got a stronger US dollar, so that puts downward pressure on it, and copper was down last night. So it's not an environment where you'd expect the Aussie to rally or rally sustainably. And it's also not really an environment where you'd expect bond rates to rise, but that's what they have done, which is consistent with the economic data you've seen in the US. So US 10s are back at 218, still very low. And the Aussie 10s are at 172, which is still very low as well. So overall, fears receded a bit. We're getting a lot of volatility at the moment. In my Business Insider 20 seconds piece today, I'd recommend you have a look at that. I've talked about how the market volatility is a lot like a Newton cradle, and just how the initial spurt of activity then ends up slowing down to something more normal as the amplitude reduces. That's what's happening at the moment. The marginal play has been taken out. They bought back all their short euros and it went to 117. Now they're out. They sold all their stocks, and now the stock market's starting to come back and they're out. The difference in Shanghai is the market's never been able to clear, and so the pressure is still on there. So, but have a look at that. And I'd also recommend you have a look at Bob Bryan's piece in Business Insider today, which is on just how strong that US economy is. There's a link to that in my 20 seconds piece at Business Insider as well. Righto, that's largely it from me. Watch out for CapEx today. Jackson Hole tonight. US GDP at 10:30 Aussie time tonight. Second revision. No real expectation of change from the market. 2.2% was the last print, and the market's expecting 2.2 again. But watch that. Any reasonable deviation from that, and we'll be talking about Fed hikes or not again, and we'll get markets moving. But overall, I think that we're still in a very oversold region of markets, and we're still going to see snapbacks. And I'm still constructive on stocks, which means that should be a good day for stock traders. Currencies, that probably a little pressure on the euro and sterling and yen, just while the US dollar finds the level it wants to sit at. That's it from me. I'm Greg McKenna. You can catch me on Twitter at Gregory@McKenna, on my website, and of course I'm writing for Business Insider Australia all day. Have a great day. Good trading. Bye for now.